What's going on, guys? Happy Monday. Hopefully everyone is doing well. Give me a quick sound check and we will get it started. Good morning, good evening, good afternoon. It's been, I think it's probably been over a week now since I've streamed, so it's been a while. But we will get back into the swing of things starting this week. Give everyone a minute. Sound is good? Cool. All right. How's everybody doing? Hopefully everyone had a good weekend, a good week. Again, I haven't been on a stream, don't quote me, in probably a week. Might be longer than that. Not quite sure. Been spending some time away, enjoying some time away from the desk. Obviously, I'm still tweeting, but it's honestly really easy when you have your phone on you constantly to just throw stuff out there. But I'm definitely, like I could say on a personal level, I'm a lot less active, and I think that this is rather has been the plan all along. First quarter's done, into the second quarter. You know, the whole sell in May and go away. There is legitimacy to that seasonality, or rather, there is legitimacy to seasonality, and sell in May and go away is one of the things that is verifiable going back to, I think, 1962. Obviously, this is talking about the S&P, predominantly legacy markets, but I think that as crypto has correlated more and more to legacy, we'll see the same behaviors, the same seasonality behaviors and phenomena that take place in legacy begin to, reveal themselves more in crypto. Okay, so before we get started, if you're new to the channel, please go ahead and hit the subscribe button, hit the like button. I don't really think that I have to go ahead and introduce myself, but I am Horse on Twitter, at Cantoring Clark. And I'm going to be putting out some new content over the summer. So this is something that I look forward to. I'm putting together another series. I created the Block Roots Market Profile and Order Flow course that is now available for free. So if you are in the Discord, you have access to that. Let me just make sure that I post the link to the Discord. Create an invite, because I say that I'm going to do that every time. And then I say I'm going to do it on Twitter after the fact, and then I constantly forget. So this is the Discord link. It's entirely free. There's no hidden agenda at all. There's no ref link that you have to click on to gain access like a lot of other Discords and communities. Right now, this is free. I say right now because who knows what I'll do in the future, right? I'm not going to lock myself into anything right now, but it's free for the foreseeable future, which could go on for some time, right? Anyway, the course is in there. The course is under the channel course. You'd be surprised how many people ask me, hey, where's the free course? So that course is entirely free. We made a decision to make that free now. I think it's going on over a year. But I am putting together a new series that will be on YouTube. So it'll be, I think, around 10 videos long, and it will be a trader manual. It's going to be specific to people that are interested in using the things that I use. So if we speak the same language, you'll enjoy it. If we don't, if you're someone who strictly wants to be a trend follower, again, I think this market is obviously great for generalists. I myself make sure that I am good at identifying when we are in those conditions, when it suits trend following and more of a hands-off, looser approach. But the series on YouTube is going to be specifically with respect, or specifically basically picking up where Block Roots Order Flow Market Profile course left off. So it's going to be a little bit more nuanced, a little bit more detailed. And again, this would be great for people who are interested in using profile and flow. It's not going to be exhaustive by any means. It's just going to be some things that I think are worth adding to what already exists. Now, remember that no course, no YouTube, no guru, no book is going to make you a trader. Ideally, you have sort of a archive or a toolbox of things that you look to over time and you build off of, and you develop your own approach to the market. It's not like some woo-woo thing, having an edge in markets. It's not some super quantitative thing that you need to identify to be a good trader. Um, it's a lot easier than it seems, but it's also a lot more difficult than it seems. I know that sounds weird, but when you walk the path, you'll understand what I'm talking about. So, all right, let's get into it. What was I going to say? What was I going to say? Oh, so before I get it off that little tangent, like I said, it's going to be a series. It's going to pick up where the course left off. But again, this is not going to make you a trader on its own. You actually have to go out there and get some feedback. So, you'll hear constantly that screen time is the most important thing. Not necessarily. I mean, undirected screen time is useless. So what a lot of people in crypto do is just stare at charts, and that's not really going to do shit for you, right? It has to be directed screen time. It has to be with a purpose. Whether you are trading some kind of microstructural inefficiency, or you're a trend follower, or you're trying to be more of a generalist, you have to know what you're sitting at the desk to do and what you're looking for. Whether you're looking for, price distortions, like I always say, trade the wrong prices. I'm looking to trade price distortions, imbalances, or if you're looking, at identifying some kind of momentum or autocorrelation in the market, you have to have an understanding of what your purpose is when you sit down to actually develop yourself, right? Just staring at screens all day, staring at charts all day, you're not going to do anything. If anything, you're just going to probably confuse yourself. All right, so I think that's it with the introduction. Some reminders. As a reminder, just to get some more formalities out of the way, none of this is financial advice, strictly for entertainment purposes only. I know that sounds silly, but listen, I'm just providing, when I hop on these streams, it's the lens that I look at the market through. It's color that I'm providing, how I look at the market. It's how I trade. I know that it's probably silly to expect that no one's going to take this and run with it and open trades on behalf of things that I say, but I would advise against that. One of the reasons is that, again, you don't have an understanding of or detailed understanding of my stats, for example. So you don't know like what I know about my trading. I know that I could expect maybe at times 5-6 losses in a row. I change my mind on the drop of a dime, right? This is something that Druck is known for. It's something, honestly, that I think a lot of traders that survive, and that should be your real goal, is to just be able to sit at the table long enough to make money and hopefully find something else to do. Or if you just enjoy doing this, which I do. But I change my mind quite often. It seems to save my ass a lot of times. And I don't feel the need to, once I change my mind, first go to Twitter, right? I'm changing my positioning first, and then I'm probably updating that publicly. And honestly, like, I don't share all my positioning on Twitter anyway. So if you are following what you see me post a couple days ago, I mean, that is probably stale at this point, especially because I'm more of a short-term trader. I mean, I say, it kind of sounds silly, but I say my trades last anywhere from 2 minutes to 2 weeks. I mean, during peak bull market, I am more apt to let things run, to not, to sleep on positions, to carry line items in overnight risk and all of that. And the entire bear market, the reason I did well is because I just adopted a system where I did not sleep on any positions. I kept everything intraday. And what this does mean is when you're following a trader who's more short-term oriented, is that there's going to be a lot of turnover, right? And an idea that's 2 weeks old, I mean, I've probably changed that positioning multiple times over. So don't do that. Okay. And then last but not least, shout out to Bybit, the sponsor of the stream. Again, Bybit is now KYC. I've gone over this ad nauseum. I have a traditional background, right? So I started as a legacy market trader. Even just personal accounts, the KYC in if you're opening up an FCM or a brokerage account, introducing broker, it's like an anal cavity search compared to crypto KYC. Crypto KYC is, do you qualify geographically, right? So do you live in a jurisdiction that permits this? And then go ahead and take a selfie and show your ID. That's crypto KYC, a little bit more elaborate if you're going for like a level 2 and, you know, you're doing like peer-to-peer and larger transaction sizes and yada, yada, yada. But compared to legacy KYC, it's a walk in the park. But, okay, we've had it good for a really long time where there's been none of that. But as this market matures, like just expect that it's going to, a lot of those things that made this market or like spoke to the ethos of crypto and the freedom and the, you know, no regulatory, the really just lax regulatory system that we've worked within, that's going to go out of the window, right? That is an ever receding pocket of the market. So if an exchange is popular, if an exchange is gathering a ton of attention, just assume that over time it's going to attract the attention that it probably didn't want to begin with, but is going to start enforcing and informing some of its decisions moving forward, which means to follow the laws. So Bybit, being a very popular, very large exchange, significant for price discovery, really good for short-term, for the creation of short-term inefficiencies in this market. And I'm talking about the apes that trade there and just, you know, get themselves trapped in a pocket always, is now KYC. So if you can't trade there, you can't trade there. Okay. If you don't qualify, you don't qualify. You got to go on to somewhere else. What I will say is that this market plays a game of cat and mouse. This happened. I've been around multiple cycles now. You know, BitMEX, when BitMEX went down, it provides opportunity for others to rise up. They kind of stay below the radar or out off the radar for a bit, and then they grow, and then they have to do the same shit that everyone else does. All right. And then what I will say is that a lot of people will say, those exchanges are dog shit. You know, exchanges are dog shit because people don't trade on them. Once people start trading on them, absent any kind of like unscrupulous activity, which I think you could just assume is going to happen more in crypto than any other market. So expect like desk trading against you, you know, some hopefully non-FTX related things, but it's not going to be like the most honest experience. But once a lot of people are trading there, that's what you want. You want liquidity, and liquidity is not like funding rates and all of that, and liquidity is not like hunting your stops. Liquidity is just it's just the availability of two-way trade, right? Hey, can I find a bid? Can I find an offer to satisfy my requirements? Okay, so the link for Bybit is below. It's Trade Bybit. It's still offering a bonus, so a bonus up to 32K. But that's obviously, it's not for free. That's if you're trading significant size, and that just ends up being a coupon for your fees. Okay, so let's get into it. So I felt like streaming a little earlier. You know, my streams are pretty casual. I like to trade the open in legacy, so I'm up decently trading the NQ, but nothing's really happening, honestly. And BTC and Ether, I think they're in areas where it's tempting to participate, but it's not an area where I think you're going to see forced participation, which is where I'd really want to get involved. It's kind of like we're carving out this fair value region. It's accommodating if you want to get in position, but you're kind of flat-footed. So I don't know. My day feels like it's done already unless something major changes. So we're going to do the stream. We're going to talk about areas that I am looking at, some things that I've noticed that I'm sure other people have noticed now as well. And then we're going to finish it off talking about a platform that I've gone back to, and it is sandwich trading. Okay, so I've shared this extensively on Twitter the last couple of days. I've shared it in the past. And you guys know, like, I love to try things out. I love to try out new gear, new platforms. It's different in crypto than other markets. Like when I was trading index futures, when I was trading legacy before I came here, you know, my limitations or the platforms I use, it was pretty simple. It's like, what software do you want? And what software can you afford? Okay, so you're trading through the CME anyway. So are you using some like crappy, non-DMA, like crappy brokerage platform, or are you using like TT software with, an introducing broker, FCM and direct market access, and you're paying more money than like the person using Robinhood? But you're trading through the same venue, right? You're trading like either through the NYSE for stocks or, trading through the CME for futures. And that's it. Like no, like multiple exchanges, no fragmentation like we have here. You have like TT, CQG, Jigsaw if you're using DOMs. Again, you're just picking your software, and most people pick it based on cost. Crypto's different. It's like super fragmented, a ton of different exchanges. You go through regimes where one is more responsible for price discovery than the other, and then you're on those exchanges. And then soon, if you've been trading forever, you realize the exchange trading is dog shit, right? It's honestly, it feels like they limit you because obviously they don't want you to have all the tools at your disposal. But if you have a legacy background and you've even used like a basic trading software, basic trading platform, not even like Sierra or TT, or you're using like Thinkorswim, you realize real quick like, oh, it's really limited trading crypto. So a ton of platforms have popped up. The problem is, okay, you might find a platform that has all the things you want, all the bells and whistles, all the order types, everything that you're looking for, but then you realize like, oh, it doesn't connect to the one exchange that I can trade on. Oh, okay, I guess I'll go fuck myself, right? So now it's all these platforms are available. They're becoming more and more available. They're competing with each other because they have to, which is great. And they're also now sort of like all connected to the major exchanges, which is what you want, right? So Sandwich, to be honest, was phenomenal from a security standpoint. Right? You're hosting it yourself. Your keys are safe. All right, that's great, but give me the goods. Like I need all the things that are available on other trading platforms and other software like TWAPs, Scale, and all of that. And if you didn't have that, it's like, okay, a lot of people don't prioritize security as much as they should. Now there's no excuse, honestly. Like in terms of execution speed, you're not getting bogged down now because it's not, again, I'm not a technocrat, so I can't describe this as good as the Sandwich guys obviously can. I see they're actually in the chat. And guys, a reminder, like this is not sponsored. This is not sponsored. One of the cool things about being a larger account is like you do get access to things to try them. And I think that's amazing. And when there are like small teams putting together great products, like it's cool as hell to just be able to share them and to give them exposure. Especially when you like using it, right? But this platform runs really smooth. It barely uses any compute. Like I'm looking at my CPU right now, and my computer is like, it is like the M5 of computers. I mean, I bought an insanely expensive gaming computer a year ago. You can't bog it down if you tried, but I'm just looking at the data that's on my Stream Deck because I have all my CPU stuff there just in case I need to look down quickly and see like what the fuck's going on. Windows Update randomly just destroys everything, but it barely uses any computer power. So it runs really light. So that's phenomenal. Security aspect is there's no one else that can compete with it because your API keys are on your computer. I mean, again, not a technocrat. I don't probably sound like I don't know what the fuck I'm talking about, but I think they could describe it. I'm going to show it in a second. And then, you have a bunch of different order types. One other order type that's not available on any other platform right now that's available to retail. So we'll get into that. I'm going to save that towards the end. I'm not going to run the stream long. It's 11:21 now. We figure it would be done by 12 noon. So New York time. All right. So just taking a look at a couple things right off the bat. Volatility is really low. So volatility is in an area where it typically doesn't like to spend much time before we get a major event. Now, what's going to spark that? Who knows? There is some kind of FUD that's been brewing, I would say, for a while now that's been on the back burner with relation to Binance and whether or not the SEC is going to crack down on them, whether or not the DOJ is going to crack down on them. Something very bullish would be, okay, so vol is this low, things are this compressed. Imagine if it comes out that the DOJ is only fining Binance. I think that would be massively bullish. If we get something coming out that's a lot more punitive, with vol this compressed, with prices becoming this compressed, if you look at something like ATR, if you look at a 1 hour ATR, 30-minute ATR, daily ATR, all that, it's all speaking to volatility being really compressed. All right. For a while, implied volatility was actually trading below realized volatility. And this was trading like this leading into FMC, which is really weird because usually into an event like that, if you look at like how vol is priced into events and legacy, into earnings, into events, it's fucking incredibly expensive. Like the other day I was trading bank stocks and actually had a bunch of phenomenal options plays, but like some of the vol in the options plays was, baseline was like 500. The implied volatility was like 500, right? Calls were like 1200. So leading into events, you normally see that implied volatility is going to be bid up. It was the opposite. It was fucking squashed down. So volatility is really compressed. If we do have any kind of major FUD, any major catalyst right now, the market is set up in a position where we could see a very large move. I personally think downside more than upside. That's just my feel on things. I'm still short from, I think, 29, 459 or 456 or whatever it is, after I reopened positions and then got hedged and short after the Ethereum Foundation moved Ethereum. So vol is really compressed. Market is kind of set up for a big move, but this can persist for some time. But historically, we haven't really been down at these levels for long, or we don't spend much time down here. And it's kind of like, you don't have to necessarily look at vol. You can just look at price action. It's very compressed. ATRs again are collapsing. Just the normal expected range of price movement through periods of time, whether it's 30-minute, 1 hour, 4 hour, a daily, whatever have you. It's important to know these numbers because, again, it helps you establish norms. It's like, okay, if the average daily movement is 1,200 points and BTC moves, 1,000 points in a day, that's not really significant. If BTC moves on, in a half hour, 1,200 points, okay, that stands out, right? We have an understanding of norms and what's kind of expected of price, and begin to understand like 1 standard deviation events, 2 standard deviation events, et cetera, not to get into the weeds. But there's a couple things worth pointing out with respect to flows. First of all, it's just my opinion on how markets work and how this market has worked in the past. People are probably going to sort of refute this with saying that DeFi summer picked up this way, the way that the meme coins have been picking up. It's been a ton of risk taking far out the risk curve. And, you've seen people searching for yield and dog shit. Yeah, this kind of seems like a canary in the coal mine to me. Positioning has kind of exhausted itself in alts that we're familiar with. There's no new stories, no new narratives. And now you have this kind of just gamification of an already gamified market in meme coins. And it's just kind of a joke, right? I called it sort of the jump the shark moment, as if this market hasn't had a ton of those. Now, this to me is like a sign worth paying attention to. Again, it's tough to say. I mean, I personally think that we're topping out. I think we're going to have a deeper pullback. There's not a whole lot of like contagion associated with this, though. It's not like so when markets are compressing and yield is being sought still, people still kind of sitting at the desk like, hey, how do I make money? Some people start using leverage, right? There's a great book called The Rise of Carry. It talks about like carry trades being levered up because their returns were diminishing over time. You have people adding more leverage to the system to get the same results, right? So when BTC moves from traveling 1,000 points a day to 200 points a day, and you have traders sitting at the desk like, hey, it was nice when price was moving. What can I do to accommodate this change? Well, let me just juice up the positions. That's dangerous, right? When all of that is on sexes and centralized exchanges. And contagion right now, I think it moving forward, it seems like it could be easier, or just the spillover of major moves within the market could be nastier because everyone's moving towards like these unified margin models for exchanges. So that I think that gets a little hairy, but staying on course, meme coins are on chain, right? They're mostly not on exchanges. They're moving, obviously exchanges are going to list them. It's a cash cow. But much of the positioning in the beginning, it was on chain. So there's a disconnect there. As far as like that market affecting majors and affecting BTC and markets that are listed on centralized exchanges. You've seen the opposite of this happen before, right? So you've seen cases where it was actually beneficial to be in like garbage on chain when there was major market movements, and they were unaffected, even though they should be higher beta and have like in a big move down BTC. Shit coins should have more downside capture. They should underperform to the downside. But there were a lot of times where there was like pockets of, areas in on chain that just were unaffected because, I mean, to be honest, like there's no money in them anyway. These people are not trading them around the same ideas of maybe everyone else in the market or what everyone else is trading. And I guess aren't as compelled to, snap change positioning. And again, it's not as connected. There's not the same, like one of the reasons why market moves a certain way is because of the tools available to people, right? So for example, like most people are trading on chain, they're not using stops. There's not like major pockets of liquidity that are going to be snap filled or market filled on trigger. So it's just different, right? That's the point. It's just different. Now these are all being listed on centralized exchanges. I don't know where all my reply guys are about the Pepe top being when Binance listed, but this is how I've been playing a lot of newer tokens, which is not something that I am like the go-to. Obviously, I know my area of competence. It's not altcoins, but I've still tried to either position myself out of things on a Binance listing, or just start getting more short biased after Binance lists it. It's like once Binance listed it, that's it. People that are early have access to the best liquidity. We're talking about people that can sell a 50% drawdown because they're still up 1,000%. So you just have to consider this. So once it's listed everywhere, it's kind of saturated. So yeah, I mean, if we're going to see meme coins start juicing up on leverage, on centralized exchanges with leverage, I'd be a lot more worried, but I'm not really worried about the meme coin being a contagion risk because it's just in terms of scale, it's not there. You know, Pepe got got big, but still not massive compared to things that are just in the top 20 that are just absolute, dead. We know that there's no reason for them anymore besides people that are diehards waiting for the comeback. But I'm not really worried about contagion from it. It just seems like, okay, this is like the market's getting to a point where everything has been stretched out, right? We've done everything. You're probably going to get to a point, honestly, of boredom, right? Which is good timing because sell may go away, even though it goes back to 1962 in terms of the SPX having poor returns moving forward into the end of the year. That seasonality is real. Ask any market maker about seasonality. There's a ton of different other instances of seasonality that are more nuanced, that are legitimate, right? However brief they may be. But seasonality, it's like, all right, liquidity dries up, volumes dry up. Who the fuck wants to trade? It's after taxes are paid. Like, I want to be outside. You want to be outside. All right, we made some money this year. Let's actually enjoy our lives. So I think we're just going to come to a period where we just chop, move sideways. Maybe we've head fake a couple times, but I don't see anything major happening over the summer. Obviously, that is like within the predictable universe, and we know that things come out of left field all the time. So that's just my opinion right now. Taking a look at BTC specifically, it seemed like there was a pretty significant presence selling on Coinbase for like within the last 48 hours, like T-WAPing out significantly. Who knows if this is relating to DCG, Genesis, all of that. That's still kind of taking place, that the market has kind of largely looked away from. I think the market still is kind of looking away from Binance as well. I think like once the development came out a month ago and nothing followed immediately, and you have people that are like, okay, DOJ follows pretty quickly. When something didn't happen, it kind of became forgotten. I don't think it's worth forgetting. I think that I don't think we're out of the I don't think we're in the clear yet. So I would just be mindful of all the sort of risks that left tail risks that exist in this market that have just kind of gone on silent temporarily. So there was a significant selling presence, an aggressive selling presence, just T-WAPing out, it seemed, on Coinbase. And then that turned into quite a significant buyer this morning. Now, futures are still selling across the market. So market was moving within a range for the last 24 hours. Or not 24 hours, but like 12 hours. Market is range bound, between like 28, 27.7. Futures still selling though. So there's a good amount of absorption there. Open interest up, I think like 15K BTC worth of risk tagged on down here. So that's like half a yard, 400 million, 450 million, maybe rough math. That's a significant amount of risk tagged on down here. I think reflexively, this market's really used to saying like, okay, that means we're going to squeeze. They're in the money still. So whoever was responsible for a bulk of that positioning, even broken down, smaller traders across the board, a lot of positions taken by a lot of traders betting on further downside. It's still kind of in the money. So it's not like that's underwater, which is when really you're going to start looking for it to start unwinding and that position being chased out of, and then the market leaning on that, obviously. So that's still in the money. You can't just look at risk and positioning coming into the market and fade it reflexively. It just is going to follow price a lot of times. So I think this market gets accustomed to bull market conditions where risk being tagged on, open interest going up, and pullbacks is just a sign of the trap developing for the next move. After the market has moved sideways for a period of time and it commits to one direction, you're going to see open interest get behind that, and they could stay in the money for some time, right? So market can break down from a range, open interest can pick up, and market can continue to break down, and then us just create a new sort of norm for open interest to reflect back on, because all that risk is, again, in the money, meaning like they're in profit. So futures, we saw a good amount of absorption. Market hasn't gone anywhere yet to really put it off sides. But one thing that does stand out is, and I think this is a little bit more important, is that there was a significant Coinbase buyer, and you can see that right here. This is just the Coinbase CVD up only for the last like 1, 2, 3, 4, 5, 6, 7, 8 hours. So, you know, a little bit earlier into the New York session, a very significant buyer. The problem is the buying didn't do anything. So there are obviously periods where price moved up. You have a little bit of mean reversion off this bounce. But, you know, after a big move down like this, the books are pretty vacant anyway. It doesn't take much to move price. So I think more importantly, it's that you had all of this buying and price didn't go far. And actually the highs are all the same. So a bunch of buying. So think about it like a ton of work was done and we didn't move price really at all. So work, effort, whatever, no results. So that usually is an indication in the spot market that there is some kind of passive seller sucking all that up. You know, passive seller, they're out of position. There's only one type of seller on Coinbase, right? Not to open, it's just to close. So, you know, if you're above that price, yeah, they're under, you know, maybe they reevaluate. You know, I don't imagine that this person who exited is going to be that like fickle with positioning where they're just going to mark it back in once that level is reclaimed. Sometimes when I see this kind of absorption, I just think like, what do they know? Maybe thinking about things a little too much lately with Binance and its withdrawals recently and the issues. And again, a little bit of FUD about the SEC from somebody who's been kind of hit or miss anyway. Fucking forgot his name, but I should mute him honestly because he just loves the attention. I can't remember his name, so that's good. But a person who's been sharing like breaking news and like hot takes and inside info from probably just DMs randomly. Some of them turned out to be true, but yeah, I don't know if there's much alpha in following him. I can't think of his name, but I think it begins with an A. Anyway, so there's a good amount of absorption in the spot market. This is just something I want to be keen to. There's no real risk of a squeeze right now for BTC. If you just look at where most of this risk was tagged on from the start, it's like, again, 15K BTC worth. It really began sub 28. So I think as long as you're sitting below 28, there's no real pressure on that positioning. Again, if you're starting to base out above there, I think you're going to see the market start leaning on it. It's kind of something that stands out. You know, it's sort of like painting a red stripe on a zebra, right? If it stands out, the market's going to all move towards that positioning, and you see sort of those squeezes take place because of that. I don't know. They might just be in the money though. This isn't looking like it's that responsive off of this low. We're bouncing for the second time. We rejected multiple times, obviously at the high, lower rotations each time. We're rejecting off of this composite for the second time. I don't see any real reason to get. Now I'm short, so I'm in good position. I shared that positioning earlier. I'm short from this up here. That was when Ethereum Foundation moved 15,000 worth of ETH. It's only 30 million, right? I mean, it sounds ridiculous saying only 30 million, but it has been sort of an actionable signal 7 out of the last 10 times. And when you take in context into consideration where we are within higher time frame market structure, we're 100% off of the lows, coming into a low liquidity, low activity period. I mean, BTC and ETH are the best performing assets this year that are liquid across all investable asset classes, besides real estate, right? I don't even know what real estate is doing, but obviously, you know, you can invest in real estate and it's an investable asset class that's larger. But in terms of beating the S&P, you know, equity indices, benchmarks, yada, 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 and not talking shit coins. I said, you know, liquid investable asset that's mature. So it's already had an incredible year. Like, it's been trending really hard. Markets move sideways most of the time. This is not weird. And a deeper pullback wouldn't be weird either. But again, I'm not really concerned. about getting involved. There's no real fat pitch right now that stands out. There's no like really obvious sexy trade. Maybe if we're trading above 28 and again we see that sellers try to hit the bid and market is just firm there, maybe I'll look to play that squeeze back through this sort of it wasn't a gap by any means, but just sort of one-sided area where there's not really much of any kind of structure built. It would probably be pretty easy for us to move from like 28 to 29, right? So that might be a quick short-term opportunity. There is that seller there though. So just keep in mind, like that seller, right, is probably an individual entity. The buyers are probably not, right? So everyone who bought spot down here, or maybe that is one larger counterparty for another larger seller. The thing is, like, are they going to hold their positioning if we continue to trade below this, right? We trade below this. We're back within this little carve out from like, this is 27.8 down to 27.2. I think that it gets pretty dicey if we start breaking below these lows today. So I think this can get sort of pukey status if that's the case. And then we just target these lows around 27. 27 is honestly the area where I really want to start paying attention. Sub 27, I should say. You have this gap like this locally. You'll say like, all right, so stops are blown out. You know, for the traders that aren't using stops on the return, you might have some break even exiting. I would look for sort of that panic behavior opportunity in this region. So from 27 down to like 25, I mean, it is an obvious structural level, but not just, looking at market structure alone. This possibly be an area where price can move pretty quick. Again, you wouldn't want to see that go. You wouldn't want to see that we're accepting back within this range. I just think this market has a tendency to do the ugliest thing possible. But I'm not saying I'm doing anything yet. I'm just saying, hey, this is where I would want to, it's probably where I would want to get most involved if price moves lower, below these lows, right? Into this gap, into that air pocket, and to look for some kind of trap set up there. And not for nothing, it's not like it's that dissimilar to what happened back here. Major pivot, swipes that, big reversal, same depth of pullback it would imply. So, kind of a 50% give back in the move. Again, this market's pretty technical, so I want to look at the things that other people are looking at to some degree, even though I think a lot of TA is kind of a meme. Major levels are areas that I want to focus on if everyone else is too. Again, they offer a level of responsiveness, but this is sort of the 50% give back for this move. That is also the top side of that 9-month long range. It's where things look really ugly and where I think a good amount of opportunity would set up. So keeping that in mind. And then 30K. Honestly, if we're back above 30K, basing out above that, I think that we're probably looking higher. You're probably looking at least a 30K to 32 move. And then we'll play from there. I mean, the whole area above us, like you can make a legitimate case for it being pretty sticky. It's obviously been sticky weeks ago when I said, this is an area where I'm hedging. I'd bought multiple times at the lows quite publicly before this nuke. I bought again down here, and then I added on 20,004. I feel like I did really well. This is an area where I don't know where price is going to stop, but I know that it's probably going to have trouble here. Hedged a bunch of times, got a bunch of shit for that. Oh, it's resistance is a construct. It's a meme, blah, blah, blah. No, we had a fucking 100% move off of the lows. There's no real reason to get overly excited yet. And look, it ended up doing its thing anyway. So if we're above 30K, I think I would get excited. I say I think because you never know, right? It depends on the flow when we get there. I'm not going to lock myself into a decision based on just structure alone. But yeah, I think, you can make a reasonable case that there's been a good amount of activity tagged on between this tight little range. We're looking for someone to be majorly offside outside of it. I think you get a deeper puke if we're below just today's lows, honestly. I don't think it would take much. Whereas if we came back above 29.6, 30K region, what does it say? It says that the market made another effort towards the lows, a failed breakdown. Now we're back above this range the same way we're kind of flirting with the lows of it right now. You're putting someone offside. And then further, you're reinforcing sort of that maybe there's more to this and that this is possibly just a consolidation before another leg up. So I think it just leaves you with a good move between 30 and at least 31, right? So 1,000-point move. ETH is holding up compared to BTC, but I think there was that spot seller that there's a reason for that. So today's session holding up better. BTC is down almost 200 basis points. ETH down 30. So you have that, but I don't know. It's not going to outperform BTC. I'm not of the camp that if BTC breaks down, ETH is suddenly like has this idiosyncratic strength and is going to hold up. I think this market's just going to remain heavily correlated for some time. So I think just looking at this, wherever you define your major contextual levels, you could define it many ways, right? High time frame range had sort of a failed breakout there. Failed breakout, I mean, a lot of times on the high time frame, you're looking at least mid-range getting retagged. I wouldn't fade this again if we're back above that. So if we're back above sort of like 20,037, if we're back above this high, sort of above this pivot, then I think you get overextension, right? Who knows where that ends up, but I wouldn't go ahead and sort of like expect that this is going to fail second time around locally. But I mean, again, you could draw this range multiple ways. Like some people have that as the range. Still, this is a major pivot, major contextual level, sort of all eyes on that. You want to look where everyone else is looking, right? Because those are going to be your high participation zones. Hold on one sec. I mean, it kind of cleans out above us. So we did a ton of volume down here. So it's a good, again, I think the macro bottom is in for these, but it doesn't mean that we don't play back within these ranges. You can see there's sort of a low volume air pocket down here where you had that pivot. I mean, that's really just telling you the market didn't really spend a whole lot of time between 15 and 14. So between here and here, you can see every time we were within that, we kind of cut through that area like butter. There's not a whole lot of development at mid-range. Quick move, quick response out. So, I mean, markets have a tendency to fill these regions out. So maybe it does that over the next couple of months. Who knows? I don't know. I don't think enough people say I don't know. Pepe, I think this is honestly topped. This is the one alt I've called the top on in like a really long time. And this was Binance listing. I mean, a lot of other people were saying the same thing. And I think they started talking about fundamentals with this. When you have a meme coin and then they start talking about some kind of fundamental use case, you know that they're just trying to justify reasons why it should be going up or more reasons for people to buy. It's over for this at this point. I mean, people made an incredible amount of wealth off this. They could sell now and still be up thousands of percent. So, all right. So let's, again, I did the stream earlier because I don't think there's a whole lot of stuff to talk about. Normally we look at this open interest pinching between alts and BTC. It hasn't changed a whole lot. So the pinch points, usually times when money is going further out the risk curve after leaving BTC and you're seeing some of that more degenerate behavior and that's when leverage builds up. But it's never really getting there because there's a lot of on-chain activity right now. So even if we look at like total, so for market breadth, I'll look at like total 3, excluding BTC and ETH. This hasn't gone anywhere. This has gone down now. But a lot of that activity is, I don't know is this including on-chain stuff that's really new? And even if it did, like 1 billion market cap coin is not going to change us too much. Got term structure down here. Pretty flat. All right. So let's talk about Sandwich. And just a reminder, like not getting paid to say this. I mean, they're gracious enough to give me access to the platform early. I've gone ahead and I have just an account to test on it. All right. So let me drag this over. I don't have anything doxed. Again, just some test funds. No positioning right now. So this is Sandwich. All right. Sandwich originally, I think, started as in portfolio management, position management system, very technical, not, some people use like a command line interface. You have that on here. But a lot of retail people are not looking for that. They're looking for a step above what they're comfortable with. This is why Robinhood took off, right? Because it's super easy to get in position, get out of position. You have to obviously satisfy some of that, but you do want to maintain like the core functionality behind what makes this a unique platform, and not just give into like everything retail wants, right? But I think there's something to be said for listing like the more advanced order types, more advanced execution types rather. But I think the first most attractive thing about this is, again, just the security of this platform with regard to your API keys. I don't need to like go over individual things that have happened on platforms. I think there's like one for every platform out now, where something has gone wrong. Someone's account has traded when they didn't want to trade, let's just talk about actually, I used Quant Tower a while back. So you guys remembered my whole Quant Tower fiasco. Who knows how that happened, but I got long 13 million contracts in BTC that I was closing out on the exchange, and Quant Tower kept sending them through. And it's just an example of a platform that is not perfected, and not, obviously you can't be in a position where your platform is longing for you, right? Some people have had funds taken. Some people have had exchange, your keys getting compromised is never good. So I think most platforms, they store your keys, and Sandwich does not store your keys, right? So everything is on your computer, which I think obviously implies you have to have a level of OPSEC and security on your end. But that's the way it is anyway. Like, you're responsible for your shit. So I think that's probably one of the most important things. Everything else is honestly like superficial, right? And we'll go to the dark setting because I know all you guys love the dark setting on everything. I'm a light setting guy. A few minor elements. In the past, it didn't change over. Now it's good. It changes over right away. I was introduced to this by Split Capital, so is it here? And then at the time, I was also talking to Light about it. Pretty sure Light used it. He's probably on vacation now, but at the time, there weren't any really advanced order features. There was basically your basic order entry type, the security that comes along with it. Like I said, again, this thing is really lightweight. I guess that's the best way to describe it. Really doesn't use any compute. So there you go. Sandwiches in the chat. API keys are encrypted and locked in your PC hardware. So that's amazing, right? Not something that I could talk about extensively, right? I'll probably just sound like I'm fucking making shit up because I am not like savvy when it comes to any of that. I should be. But I'm really excited about what was just offered, and we'll go into that. Before we go into that, just again, on this test account, portfolio dashboard. So you can see we have some funds. Again, this is just a test account. Portfolio dashboard, it's all in USDT now. Positions, no positions open. Orders, no orders open. Exposures, again, just USDT. This is if any of you have traded, if any of you have a TradFi background and either worked for a bank, a desk, a prop, or a fund, you're going to look at it. Honestly, this is going to be more. This is what you're looking at. This is professional grade. And I'm pretty sure that they use that in their own verbiage. Algo Manager, we'll go into that in a second because we'll place an order and show you what that's going to be showing, which I think is awesome because other platforms that do offer like a TWAP, for example, they don't have this. You could have your TWAP, or let's say you have a scale running or some other, iceberg running. You want to kind of see where that's at, what progress is, what the extent of that fill is, if anything else has changed with respect to it. So this is good to have on its own page. I like how everything is really clean. Balances, that's pretty self-explanatory. But a couple things. Customization. So you can customize pretty much everything now. So, going into settings, general, so that was a dummy account. We have balances, so you could hide dust, all that. So this is something that's good to talk about. So you could customize your quick fill sort of default buttons. So we have it set to 25K, 50K, 100K, 250K. This will accumulate based on how many times you press them. So you guys see me use Sierra charts and see me use the DOM, and I have, my orders are customized there. How many lots I'm looking to trade. Very quick. It promotes quick action. And if you're a manual trader, this is something that you're going to prefer, right? You don't want to type the shit in. If you're used to the lot sizes and you have that sort of mapped out, you just want to be able to press a button. And then if you want to add to them, you want to just be able to click again multiple times to get that up to where you want to, what position you want. Price widgets. This is for quick trading. So simple or expanded notification. So this is all pretty self-explanatory. I think this is newer. You could actually just customize these windows however you want. So let's say, for example, I'm going to move now these are going to be customized based on this template right here. But let's say I wanted to open up 2 screens. So I'm going to drag my Pepe and I want to put it on the right. So here we go. Now I have, let's say I want to have BTC and Pepe back to back, or side by side rather. Or I want to have like my, direct market access, my trading interface with, my exposures or my algo manager next to it. I could do all of that. And I could do this as many times over as I want. But for the sake of time, we'll do it quickly. I want to get this back. I just drag this to the center and put it in the center box. So complete customization. There's a couple other things too that you could just have off screen that I've reduced to the lower portion of the screen. So just log. Normally you could have this up. I just pin that down there. Feedback, log, all of that. Pretty easy stuff. It's, again, this supports. So my dummy account is named after my dog. Again, you can't do anything with that. So for anyone who's looking at this thinking it's doxed, this is just for the test. So we have Binance, we have BitMEX, we have Deribit, and then for all you Dexers and non-Sexers, DYDX. So that's pretty awesome because I don't think any interface right now, software, I don't think any of them offer DEX access. And I'm pretty sure you're just going to see this expanded on from here. You have Kraken, and then you have OKX. And shout out to our good friends at Kraken. Those are some great guys. What else? What was I just going to say that I lost? Shit. So for those of you that are KYC'd now, and let's say you're trading on Bybit, one of the issues that plagued a bunch of platforms, journals, software, was their switch to unified margin model, which is great. I think most exchanges are going to switch to that. Again, I do have my sort of beliefs about how that might affect contagion in the future and some high vol events. But that caused issues for everyone who had software. All right. So, for a long time, if you switched your account, let's say you made a Bybit account and you were KYC'd and then you switched to unified, you can't go backwards. So you were unable to use platforms like this. And now, again, it's fully integrated and available to use. I know you guys don't give a shit about any of that, though. I'm messing around. Funding rate, all of that stuff. I don't know. This is the stuff that makes a massive difference in your trading. This is stuff you've probably tried to do on your own, right? You're trying to buy into a position over time. You're trying to scale your orders manually. I mean, that is, again, most traders in crypto, I would say, are manual discretionary traders. They're clickers. And before you even get into like making algos or you want to automate things, you should be a clicker anyway. You should have an understanding of like, okay, I'm going to start hitting the bid, lifting the offer, and get an idea for like how market responds. Everyone should start off as a manual trader. The features on this, on most exchanges, you just get limit market, right? And you get your time and force, you get your, immediate or cancel, your fill or kill, your good to cancel. Some exchanges will offer these sort of, customizable increments, right? So again, I want to buy 25K worth of Pepe. I want to buy 50K. I want to buy 75K. Or I just want to immediately buy 100K or 200K. All that stuff is really easy to use. And again, this is all customizable. What exchanges lacked are all of these more advanced sort of algo order types. And again, there are competitors that offer almost all of these except for, and this is something that I think is awesome, Iceberg. So when TWAP became popular in crypto, it kind of so crypto is a bunch of newer people trading, right? if anyone has a TradFi background, if anyone's traded legacy before this, there's a lot of things that crypto traders get excited about that you're like, okay, like, all right, we have that. Like, you don't really use that. You don't need that tool. So TWAP was one of the first, I guess, cooler order execution types that was unavailable initially to most crypto traders and now has been integrated. I think Binance offers it on their platform. Other third-party software platforms offer it now. TWAP is I'm setting the time that I want to buy or sell, and then I am setting the amount of clips throughout that window of time. So I want to buy, all right, so I want to fill a position, okay? I want to step away from the computer all day. I think that, let's say I've identified that there's some anomaly. It's not even an anomaly. There's this behavior where Monday opens, and this was like during the bull market. New York session, someone starts TWAPing aggressively for the week. Well, I want to be part of that. I don't want to sit at the computer, but I know that if I buy from, the first 4 hours on into the New York session, there's a positive expected outcome, or that trade is positive EV and has a positive return over the next 3 days. Okay, I just want to fill a position. Over that time, I don't want to be sitting at the desk. I don't want to ape in, even though there's good cases to be made for aping in versus like dollar cost averaging over time and how it's better sometimes just get a complete fill. But let's say I want to build a big position. Okay. I want to build a big position. I wanted to buy 100 BTC over the course of 4 hours. I could do that now. I could set this to, let's say, 4 hours. All right. I could buy $100,000 worth of, or 100 BTC, whatever you want to use. And I could set the increments that it buys throughout that window of time. And then depending on what your time interval is, you'll see how it'll change. Okay, so I want to buy 50 lots over 4 hours. What that means is that every 4 minutes and 48 seconds, it is going to buy a certain amount of BTC. Now that's if it's just static, right? There's no, it's not dynamic at all. There's no randomness. Now, if you're TWAPing in this market now, you know that people are pretty keen to that, especially when it's with size. Order books, tape looks kind of random. A random market should obviously, self-explanatory. It'll look random when you have a bunch of people acting on behalf of their own beliefs and they're not informed. If you have someone that is buying over a certain interval of time, you have other sort of predatory algos that are picking up on this, and HFT that's picking up on this, and market makers will even be able to pick up on this, right? Okay, every 5 minutes, 10 BTC is bought, right? That's over time. That is going to stand out, and someone's going to trade against that. All right. So you're going to want to, if you're a larger, this is for people that are really big, right? This is not for like your average retail Joe. If you're Soros and you're trying to buy, 50 yards of the S&P, right? Just making up a trade. If you're using a set interval TWAP in a very thick market, it's going to stand out. People are going to do what they do when larger people enter the market. They're going to try to front run that. They're going to try to sort of be the remora. Is that what it is? The fish that are on the side of whales? Where they're just going to ride that wake, right? It's going to stand out. You don't want everyone to do that though, okay? Because that's at a certain point, it's going to have massive market impact. If I'm a market maker and I see that someone is TWAPing, for a significant amount of size, and I can't get out of that position and hedge that, I'm going to step out of the way of that. Like, that's toxic flow. It's aggressive activity. So again, this is going to have a big impact on the market if things are not random. I don't want to continue to go on this because I'll just continue talking ellipses. TWAP is really good, right? And you can play around with this, change the randomness. Most people are not going to need to do that, right? No other platform allows you to change for slippage though. So that is pretty awesome. That is awesome because let's say you were TWAPing and someone is picking up on that and you're some mega whale. And then they're removing like sell side liquidity or buy side liquidity. You're TWAPing, into a buy, long or short, or out of position or in a position. If they're adjusting to that flow, you're going to get they don't want to be adversely selected, and they're going to get out of the way. So over time, the book is going to become thinner. And the thing about a TWAP is like you want to use it in thick markets, right? You want to use it in thick markets where it's not, you're not going to get penalized for using market orders, because that's what it's going to do. So that is a TWAP. That is something that is, again, it's more useful even if you're like not someone of mega size. It's actually just useful because a lot of times I will tag on what I'm comfortable with for swing positions. I'll tag on what I'm comfortable with, even if it wasn't going to get filled completely. All right, so this is one of the ways that I trade. If I'm swinging, I have an idea. I want to get a position on so that I have a feel for the market, right? Because a lot of times you don't know how you feel about a position until you actually have a position. So I get skin in the game. For me, it's either a quarter or half a position. And a lot of times, I will actually be happy with half a position filled, even if it got away from me and I wasn't filled for the remainder. I could set limits below, but I don't know if the market will come back, right? Chances are, maybe if let's say I'm trying to get filled for a larger position and all, if I'm placing limits in the book, it's going to show up as more demand. You could just begin to extrapolate on this. I'm not going to say that this happens all the time, but you don't know if that's going to come back to that level. People are going to front run you. People are going to front run them. And this is how one of the way trends begin. So I don't know if market's going to come back to me. I will probably just try to fill the remaining order with a TWAP. Now you could do it with a limit chase, but limit chase is it is as it implies. We haven't gone over that yet, so we'll go over that in a second. But a lot of times I'll just try to, all right, I'm going to fill half of a position that I'm comfortable with. And then, if I think that this is going to mosey around and, I don't want to sit in front of the computer. I don't want to get shaken out. I think it's going to be noisy. You got to give price a little breathing room for swing trades. I'll just tag on the remainder, all right, so I'm going to fill the remaining position over 2 hours or 3 hours. Honestly, it's probably not, like if you were going to quantify whether or not this was really positive EV, maybe it's not as good as me just aping in the rest, but mentally, that's the point. Mentally, it's more comfortable for me, okay? Because I free up a little bit of time, right? And time's very important when you have a little one now. I don't do a whole lot of swing trading as of lately, right? I've gotten out of most of my swings, gone back to just intraday trading as of the last couple of weeks. I've tried to be as transparent about this as possible. The whole bear market was like that. But again, very useful tool, great for thick markets. Honestly, better for thin markets is an iceberg, but we'll get to that. All right, so POV, and just in case you were wondering, if you don't know what these things are, this little information box is very useful. The POV algorithm, right? It's a percentage of market trade volume. So basically, you don't really want to ever be too much of the daily volume anyway. You could realize that you get yourself into trouble if you're trading something and you're like multiples of the daily volume, right? If you're trying to get out of position, especially, let's say you get yourself in an alt position and like you've built up a swing and the time you got in was really accommodating. It was a hot pair. And, let's just say for shits and giggles, you built hopefully one day you built a $10 million position. And now you see that 24-hour volume is like, I don't know, a fraction of that. Okay. You don't want to ever be too much of the daily volume. And you don't want to do anything to stand out like a sore thumb when you're trading size. Most of these algos are going to be geared towards people that are trying to have less of a footprint, I would say. And that's what makes them, I guess, very professional grade. And even if they don't necessarily, you don't need to use one of them, you should become used to them and you should aspire to at least get to the point of using them. But a POV algorithm is just a percentage of market trade volume, right? So you define this, you define the participation rate, like it says, you define the time interval between clip entries, all right? And again, it's useful for trading larger trade orders. And in the beginning, I said this is something that was this is a good tool. As it started, this I think was geared towards your portfolio manager level participants. All right. Again, people that don't want to leave a massive footprint. Coming from a TradFi background, if anyone's traded legacy and even retail oriented, that VWAP is an area where a lot of these larger entities want to get in and get out of position. You want to get in if you're trying to get out of position, the same way when I talk about trading with volume profile and TPO. and talk about the POC as being an area where it's sort of like a static VWAP. The point is, like, there's a good amount of two-way trade there. So if you're a portfolio manager, you have a legacy, you're a legacy portfolio manager, you know all about this, right? You'll get brownie points if you exit your position above VWAP, and you'll get slapped on the wrist if you exit below. But so this is something that is very cool. Scale. This is what you, I mean, I remember doing this manually for the longest time. You don't want to do this manually because you can't. Most of you guys are not going to do the maths either way. But scale is just as it sounds, right? Okay, so price is never 1 point. Okay, price being at 1 point is never right or wrong. Usually you're going to see price will develop value within a certain area, right? So that's why it's like there's not many lines in the sand for price. There are regions where price is, again, just carving out, developing value. If you're trying to build a position, sometimes it makes sense to just ape in one area. Sometimes it makes sense to obviously try to get filled in over a certain range. And that's what this is going to be useful for, right? Let's say you have like a major high or a low or a swing point or pivot that you're trying to buy the dip in or sell, right? If you're trying to sell the top, whatever. I hate to say that, but because you're never going to sell the top. Scaling is just as it sounds. I'm trying to fill over a certain range or exit over a certain range, and rather than, and I think these things make it more comfortable also, rather than you getting filled in one range or 1 point, because when you get filled for a position at 1 point, immediately it's going to be offsides, right? Most of the time, you're getting, I want to buy this dip, you bought it, you're offsides, right? So scaling is just as it sounds. Let's say we'll go to BTC. We'll go to scale. And again, you could take all of these, this algo thing, and put it right below if you wanted. So we could have an eye on that while we're doing this. So I want to buy, I want to buy 25K worth of BTC. I want to buy that between, I think this dip is good down to 27. All right. So I have my reasoning. I think it's good down to 27. We're at, right now we're at 27,845. I'm filled half, and I want to get filled the remainder down here. I think we're going to be loose down here. I think there's going to be a significant chance we're going to pull back. And I want to get filled over this range, right? I now have set my price levels. Now I'm going to set my clip size, right? So 20 lots, 10 lots, 12, you see how it works, right? I got to adjust this off a sliding scale. But now that's just going to pretty much evenly place them. Right? You can see how it'll change, right? So it's not exactly even, but it's going to uniformly change them. Let me just make sure. Okay. This is where it gets cool. Now I could adjust it so that either those are skewed higher or lower, right? So you could start to imagine how, this would apply. I want to have my average price be higher or lower. I am more confident about us having a shallower pullback than deeper. You could begin to see how this would be used depending on your, view on where price was going to travel and where you would most likely get filled and where you would, be willing to, I guess, forego and have less filled, yada, yada, yada. So now let's say if again, 25K, 20 lots, between that price, and we're just going to have it skewed a little bit lower. I'm just going to buy that, create and start, and there's your algo. And of course, it's not filled right now, but you can see it's running. All right. Volume placed. Okay. And now we're good. We're just waiting. Okay, and here's your orders. That's each individual order. And oh, damn it, I don't want to do that. Cancel selected, or cancel all. And if you go on the exchanges, this is instant. So this is instant. There's no lag or anything like that. So that's scaling. Swarm. This is basically hitting the book with smaller clips. I think this is, you could randomize this. This again is for minimizing market impact. So it'll say the swarm algorithm is used to fragment a large order into smaller market orders, aiming to reduce slippage. Again, reduce market impact. This is going to execute them really fast though. Right? So I want to buy 25K worth of BTC, and I want to size it randomly, little, moderate, or significant. So we'll just do little. We'll buy that. You can see it's running right now. We bought some, and now we're in. But it broke that up and hit the book randomly. Again, remember, you're trading against smarter people that are looking to pick up on things, right? As vague as that sounded. All right, so now we have exposure, right? So now we have positions, again, showing up here. I'm going to get rid of that. Closed it. And then last but not least, this is really something that no one else offers. So an iceberg, as it sounds, tip of the iceberg is exposed. I want to buy, and this is, icebergs are, TWAPs are useful in thick markets. Icebergs are useful in thinner markets, right? So an iceberg is a large order that is broken down into smaller limit orders. The point is to hide the remaining portion of the order, okay? So I want to buy 100,000 worth of BTC. This iceberg would be more like, hey, I want to buy 100 million worth of BTC. And now I want to only expose this amount, right? You can see the remaining amount in the order, but now I'm only exposing this. Okay, but there's a larger order behind that. Okay, that is now hidden from view. So the idea is like, you've seen many times before where a large spot bid or a large spot offer is going to influence the market, right? It's an advertisement, right? We know how they get yanked and they're spoofing and all of that. But by all means, if you, again, context dependent, let's say we're in a bull market and you have a couple things lining up, funding is going negative, we are seeing signs of strength, price action is constructive, we're looking at, again, a possible dip buying opportunity. I'm trying to get filled for a large position. If I put especially for larger traders, if I put that I want to buy 200 BTC on the bid, good luck, right? Every little algo is going to be jumping ahead of me, right? And leapfrogging me, and it's going to be unlikely that I'm going to get filled for that. And with market depth and with the limit order book, with the lob, you have queue priority, right? Depending on how long you're sitting in that spot. So if you are ahead of everybody, again, as it implies, you get filled first. If I hop on last, I might not get filled at all. So you want to have a position there, right? So the iceberg is really useful for anyone who's looking to get filled for a large position but doesn't want to advertise it. And again, this is more useful in thinner markets especially, right? In thinner markets, it's going to be easier for the market to move away from my position, okay? And then, volatility is just going to be a derivative of that. And then someone jump ahead of me, a new price, right? When price reprices higher, I'm bid 27.5, for 200 BTC. And now it's very easy for someone to just jump ahead of me and get in the queue, and it's unlikely I'm going to get filled. So what I want to do is fit more uniformly amongst that, the top of the book, or, within the 1% spread. So awesome tools. This platform is the platform I'm going to be trading on now. And I've been waiting for everything to come together, find something that offers everything, and this offers everything. So that was that. Hopefully you guys enjoyed that. And again, this is not a sponsored podcast. Sandwich is not sponsoring this. This is just something that is really cool. And I like cool shit. I'm a gear whore. And yeah, I hope you guys get to try this out. It'll be worth any penny or every penny that they charge for it, right? When you have good stuff, it's I don't know what their plan is to charge or any of that. But if you have used any platforms that are more sophisticated than just the basic exchange page, you know that you get what you pay for, right? Any price really, you could say, hey, we could charge more, right? Because again, you're not getting this really anywhere else, and the security is there. So there's really really no one else that competes on that level. And I think that this market has had it really good, honestly, compared to like getting data in legacy markets where you pay like fucking thousands of dollars. We got data in for like basically for free in this market. And like if you want to trade on, if the money you put up in legacy is what's going to dictate how fast you get access to the market, the kind of tools you get access to. I used to use trading technologies, and that's like I think that's probably like $700 a month now. It was probably like 5 back then or 6. I don't remember. But you pay for this shit, right? But trading is business, right? If you're trying to do it seriously, and not just fucking goof off and, I don't know, lose money on the weekdays and weekends, you'll realize that you get what you pay for, and this will, I think, make you better off, obviously, in more ways than one. So that's that, guys. I think that's going to run it in terms of what I wanted to talk about today. There's not a whole lot. Again, we started the stream at this price, and we're at this price still. So I think that says everything right there. Is there anything else I want to talk about? No, I think that's it. Hope you guys have a fantastic week, evening. I'll probably go live again, maybe on Wednesday or Thursday. I don't have a schedule. It's the summer. I'm trying to relax. We have a vacation coming up soon. So, all right, that's it, guys. Be sure to check out their Twitter page. If you're not already KYC'd on Bybit, well, you're probably not trading there anymore, but obviously, you guys know how I feel about them. And yeah, shout out to Sandwich. Have a fantastic evening, guys. Find something else to do, because